Good morning, guys. One sec. How's everyone doing? Watching Dr. Som's eyes bug out on the rate change of unemployment was interesting. Imagine if we can make up a magic gherkinit rule. Okay, well, that's because Claudia Som spent the last 8 months trying to build her Twitter profile on the back of the Fed is doing a fantastic job. Everything is rosy. The economy is perfect. Much like her indicator, her analysis is lagging. And I already have a gherkinit indicator. If the forward yield on volatility, if the forward yield of vol convexity remains positive for, let's see, more than, I'm just gonna make this up on the spot, 21 days, we're in a recession. Is that how easily price can slide through gamma levels? No, no. Oops. Yeah, just ignore that, sort of. Good morning, Yigs. Barl's here, says Mrs. Carl. That's awesome. Hi, Barl and Mrs. Carl. Morning, Jen. Yeah, I thought I was gonna be late, and then I ended up being kind of on time, but maybe a little bit late. First, are we starting early? No, I think we're well, sorta, I guess. Morgan, gorgeous. Okay. Huh. A wizard arrives exactly at the time he intends to. No, no, I didn't. But I am here. We got a lot to cover, I think, going into tomorrow. First things first, I'm not going to be here tomorrow. I might be here Tuesday, but tomorrow's going to be a bit crazy, and I have a lot of things to get done early in the day. I have some meetings I have to go to, and then I have a doctor's appointment. So I'm probably definitely not going to be here during the majority of tomorrow's trading session, I think. What did you have for dinner last night? I had a salad and tortellini with like pesto. What the fuck? Yeah, that's that was my dinner. What? I don't understand the issue. Crash confirmed. Okay, just because I'm not here doesn't mean the market's gonna crash. What do we need to know to survive tomorrow? Well, we're gonna cover the important support and resistances for SPX. We're gonna cover some of the vol stuff because that's been going crazy. Um, Probably get into some other things too. I think. Uh, yeah, yeah. I think we're gonna cover. We'll cover some stuff. Who is this to blame you for my trading losses if you're not here? You can't. Wait, hold on. Since Mrs. Carl is there, does she know that all of your trading losses have been your fault all along? Did Greg say we can get access to the beta tomorrow since he won't be able to stream? No, because it's not launched yet. You wouldn't even be able to access it. We're still getting all the user registration shit done from the list you guys filled out and doing data verification to make sure everything's spot on. And then things are looking good though. I think we're gonna be on track hopefully sometime before August OPEX. Did I just ruin your life, Carl? It's okay. All your failures in trading, Barl will exceed. He'll be the best trader ever, and you guys can constantly be jealous. Or you'll just be jealous of him. It's gonna be perfect. Did he get his copy of Options as a Strategic Investment yet? If not, I'll send one. Can the YouTube stream just be beta info for the SPX? But this stream? I mean, I'm gonna put all that information in Pickles Picks tonight. Shorting BAC and JPM at open. Why? Don't send a weapon to the house. She'll beat him with it. Warren sold JPM? Has he even owned JPM? I thought he didn't own it anymore. I thought he like got out of that back in like BAC and Apple 55%. Yeah, that sounds smart. Why not? Maybe they botched the carry trade unwinding. I understand selling BAC. Their balance sheet sucks. I understand selling Apple because it's a value trap. I don't think he owns JPM. I don't think he's owned JPM since like 2020. JPM's, I mean, on paper, probably the most resilient of the G-subs. The Discord isn't letting me post or send messages. Why? That doesn't make sense. DM me so I can check your account. Just has the most notional amount to fall. Okay. Yeah, as a sympathy play to other issues in the banking sector, I could see JPM being all right. Um, it definitely has a long way to go down, but uh, kind of risky. Hmm. Let me check out their options. As it starts to fall under 200, it gets a little bit more bearish, down to about 185. And then there's some put interest further out, but not a ton. 185 and 190 are pretty big supports. So at least maybe in the short term, like back to there, or there. If it slips that, then it gets really nasty. Well, hold on that, Carl, because I want to be sure that he's able to post a thread. So I want to check his account first, because he should be able to post in the data request thing. I don't know why he's not able to. 200, 185 is the profit zone. Got it. Let's curb stomp Jamie. Well, I mean, it could be, or it could keep falling. But I mean, that's where it looks like it could fall to right now. Losing 200 is a big deal. Needs to lose it a little bit more convincingly still, but Mrs. Carl is here today. Does that mean we have to keep our low T and her visiting you jokes out of the chat? I mean, nobody is more intimately aware of Carl's low T than Mrs. Carl. What about 18 DTE cover call on Netflix 950 or 650? Sorry. It's pretty far out of the money. Do you have 100 shares of Netflix? Netflix looks pretty bearish. It doesn't get bullish again unless it pops back above like 135. There's resistance at 620. Um, calls start to pick up a bit at 640 and higher. So I would say upside resistance 620, 640, and then things get bullish above that. And over the next couple of weeks, I don't know about 18 days, but over the next couple of weeks, the options trade is pretty bearish. Most of the bullish stuff is a bit further dated, and those options are probably sold given the recent drop. Right now, it looks like Netflix is headed for 600, 610 to 600. Welcome. Did you bring your suit? Can you please talk about VIX effects on SPX if we stay in a highly volatile environment? VIX doesn't affect anything. It's an index based on a calculation. It means options will be more expensive, and the fact that volatility is higher means that the intraday ranges in which we trade will be wider. Risk-wise, if we see a cut, would this hurt the yen unwinding significantly? It would accelerate the yen unwinding. A cut narrows the spread even more. And on the US side, a cut narrows the spread really fast. Big week for Fubo this week. Earnings and lawsuit begins. Most illiquid it looks like it's been in a long time. I'm ready to rock. It's pretty illiquid. Is the stream stuttering for anyone else? Just try refreshing it. Any advice for selling credit spreads on this wild volatility? Don't. Definitely nothing that carries any kind of significant risk. You probably want to keep them tight. They're going to be better on individual equities than they're going to be on indexes. Because individual equity, like dispersion's breaking down, right? So vol on equities should be declining, vol on indexes should be rising, right? So if you're going to short vol, probably better to focus on equities. That's going to give you some edge, but I mean, things like Mag 7 and stuff are still going to be really volatile. All of my TA on VIX, useless? Shockingly, yeah. Yes, it's for me. The longer term buy hold port, no options. As someone who does believe in a correction recession, is there anything to buy or does everything go down and it's best to wait until a recovery? I mean, there are things that are defensive and things that don't go down as much. Um, Consumer goods tend to do fairly well, like consumer non-durables. Um, Materials and manufacturing recover quicker. There's other defensive sectors if it's assumed that rates are going to be coming down significantly, which it's currently not. Then small and mid caps with debt burden could start to see some better pricing. Bonds are rocketing, which is nice. And probably will swing wildly both ways a few times before this is all over. But gold tends to benefit from a falling dollar. Nikkei is going down due to a rising yen. Yen's going up, right? I mean, there's a lot of things that you could target. Um, there's non-leveraged like short SPX funds where you can just buy shares um, without having to worry about the immediacy of the drop in price and those because you don't have the volatility decay. Debit spreads instead of strangles. I mean, that's a way to reduce capital exposure. I don't know if we're quite there yet. Vol crushed down pretty hard after the big spike on Friday. But remember, as vol rises, we're going to get a lot more movement in that. So, are cannolis bullish or bearish? It depends on if they're good or not. What are risks to consider if going long gold and oil here? China's economy can collapse. Um, there's a pretty significant risk that there's some there's less persistence in the OPEC cuts than previously presumed. The escalation from Iran might not lead to anything, right? Which means that any risk premium priced in will be really quickly priced out. Uh, Gold, a little less tricky, but inflation could rise, bolstering the dollar, which would probably cause a slight sell off in gold. I think gold will remain relatively high, um, at least until the top end of the yield curve starts to move back up again. So, like, coupons start to rise, which we're probably not near yet. And I'm not super worried about that until we get another seasonal adjustment on CPI. But after the next seasonal adjustment, I would be a little bit more concerned that gold wouldn't be able to hold these levels. Consumer non-durables, when consumers are in pain from inflation, job loss, etc., people still have to eat. You know, but like what little money people do have tends to get spent on very like fewer sectors, right? You definitely see a decline in discretionary spending, right? You know, people are gonna start cutting luxuries, right? And then but they're still gonna continue to, you know, buy food, buy buy, you know, medication. They're going to continue to buy the things that they need to survive. And so generally during, you know, any kind of economic slump, you know, things like grocery stores or dollar stores do really well. Places like Walmart really don't get hit as hard as everyone else, but they'll still get hit. They just tend to recover faster. And sometimes they can, you know, outcompete what was previously larger competition as more agile companies are able to adapt faster. So there can be some value in finding things that are a little beaten down and maybe don't have a lot of market share, um, as the opportunity for them to gain market share opens up. Just refresh it, man. I don't know. It's YouTube. My upload's fine. I could try switching the thing, maybe. Uh, what? I can just tag products in my stream now? This is amazing. You're gonna start tagging BlackRock REITs, aren't you? No, I'm gonna tag these shoes. I don't even know how that works. Did something happen? Shiltopia? Alright, I did it. What happened? Did something happen? I don't have anything for Osiris, but I do have my shoes. I refreshed, and now Hoka is below the stream. This is fantastic. Financial orthopedic shoe channel. I can't take any more of their commercials. I'm gonna buy a pair if I keep seeing them. They're honestly awesome if you have like knee pain or back pain. But otherwise, I would say they're just overpriced. With ad block, nothing? Well, this is disappointing. I tried. Anyway, where were we on the stock stuff? I love Hoka shoes. I use them as my main running shoes. Nice. Pifi earns commissions on tagged products, right? How fucking cool is that? I already have Hoka shoes. Nice try. Hoka shoes are now up in the bottoms of the stream itself. I can't even see this. What other stuff can I tag? Oh my god, there's so many advertisers that want to work with me. Clarence? Does anybody need some face stuff? Oh my god, I have I can shill beauty products? They actually do have extra wide. 145 for shoes? That's not expensive. Fucking pores. Well, this is pointless. Tesla 200p for this week. Slipped GN. It did. It did finally slip gamma. Gamma neutral. Well, almost. It slipped GN Friday, but GN actually went down. There's still some support at 200. More support at 185, though. I would say it could probably fall through. 200 support is pretty crazy. If it loses 200, very bearish. Crash confirmed. Grick is prepping the home shopping channel. I didn't know I could do this. This changes everything. I'm poor because I don't buy cheap shoes. Is NQ dead? It's gotten murdered over the last couple of weeks. I mean, it's not dead. It's still up like fucking 80% from its lows, but it's definitely taken a beating. It's right on trend as of Friday. I think it bounced off it a little bit. Yeah. Although if that fails, ooh, 17? 1600? Maybe make something option strat and share. Okay. You could have saved Revlon. I know. Check out ticker FL. Let's see how Foot Locker is doing. They're clearly desperate for money if they're trying to use me for advertising. Earnings have been good over the last 3 quarters. Margins picked back up for Q1. Cash flows are fucking terrible. What the hell? 1 second. All right. That was weird. They're tearing off the drywall in my hallway. When you talk broader market SPX, do you cover IWM and QQQ? Maybe a little. A little off topic, but how does repaying Ukraine work in terms of the money given? How does Ukraine pay us? Trade deals? Rebuilding contracts? There's plenty of economic opportunity after the fact. I've never been to a Foot Locker. How's Logitech stock doing after they announced their mouse as a subscription idea? That can't be real. I don't know. Maybe not great. BTC's down 4%. Yeah. Riskiest asset. Paying interest on a 100-year loan. I don't believe you. About what? Foot Lockers are very mad. Just a generic shoe apparel store. Nothing special. Foot Locker is a cornerstone of the 90s. I thought they were in literally every mall on the planet. I don't know. I think you had Kenview as a pickles pick a while back. Yeah. Well, sort of. Cover it briefly as earnings are on the 6th and they just increased their dividend. I mean, it doesn't have a lot of room to go down. It's already pretty poorly valued. I do know that they increased their dividend. I do own some. I occasionally sell, CSPs against it. Margins haven't been doing too well over the last couple of quarters, but this is definitely consumer non-durables, right? So I think This is not something I mind owning during a period of maybe some economic fragility, right? And the dividend increase is nice. It puts it closer to where the current federal funds rate's at, which is going to be well, yeah, that'll be nice over the coming years. And I don't think the value is going to drop substantially from here. I mean, it maybe if there's a crash or something, but it's only trading at like a PE of 23, which for the sector is not amazing. But they're getting their debt paid down. They also have a massive debt burden due to the transfer over from Johnson and Johnson. But it's like, I mean, it's like Tylenol, Robitussin, shit like Band-Aid. Like it's never gonna really go under, right? Folks at J&J still speak highly of the Kenvue brand. Neutrogena, yeah. I mean, yeah, just kind of middle of the line consumer non-durables that have been, cornerstones of their sectors for fucking 100 years, right? It's like a super defensive investment. It's right around my cost basis now, pretty close. I think my cost basis is like 19 something. Stream's cutting in and out. I don't know why. I have solid upload. There shouldn't be any issues. It's probably on YouTube's side. I think it's on your end. All right. Just reload the YouTube page and it fixes it. There you go. The drywall was integral to your stream quality. I don't know what the fuck they're actually doing. They're just ripping out like a whole chunk of drywall over by the garbage chute. I'm wondering if someone jammed something in the garbage chute again and they got to take the wall out to get to it. Will you manage your positions from your phone tomorrow? Yeah, probably. I'll set up like conditional orders and stuff tonight. Does Newell Brands fit that bill? They do to an extent, yeah. That's not it. They're more producer manufacturing. I think we covered Newell Brands like last week. You might have asked me about it, or the week before. Um, some of their stuff, yes, I think is fine. But some of their other sectors maybe not so much, like kitchen appliances, um, gourmet cookware, bakeware, cutlery. Those might not do so well. Office supply stuff is probably already hurting, right? Because more work from home. Outdoor and recreation segment could benefit. They've been getting their debt down. That's some improvement on net income. I feel like they would benefit a lot from being able to restructure their debt. So maybe a lower interest rate environment would be more beneficial to them. They've been, on a pretty distinct decline since rates were raised. But even before that, they weren't doing great. bit of a value trap. Maybe cut the dividend and start investing in some new revenue streams. But sometimes these companies really don't like to do that. You know, they'd rather just rest on their laurels. Simple bear put. Yeah, that doesn't seem bad. You sure you want a 16th expiry though? Why not just the weekly? I would say that that's the like that particular setup is pretty good for like a skip strike butterfly, right? So, hold on. So Tesla has support at 200 and then support at 185, right? So something like this. Yeah, I think I like something like that better. Maybe for the ninth. This would still be profitable at 85, but like more so more so if it bounced back from 85. Pretty minimal loss, right? 175 max loss. If it keeps dropping, you don't make as much, but this way it could like test. So if it were to test 85 in the early part of the week, right? It'd be like right here. And then bounce back towards 90 by end of week. My concern there would be that it bounced back to 200 by end of week. Mm. I kind of like that. Do you sell your bonds on some premium increases, or do you hold for the interest? I mean, the longer dated stuff, I definitely sell, especially if the gain in the underlying bond is in excess of like the interest yield over the next couple of years. I'm gonna keep some of my like 5%, 30 and 20-year stuff. Probably, well, I say some, but probably like 20 to 30% of them. The shorter dated shit, absolutely gonna sell it as the premiums go up. Anyway, that might be how I would approach Tesla because it has such a like defined range. Then Apple looks kind of shitty. Amazon looks really bad. What was this tab? Oh, it definitely wasn't that. Was that AMD? There was some bad news about the Blackwell chips. I think there's like a 3-month delay on those. That's probably going to impact Nvidia this week also. I would argue that Microsoft's been one of the most stable throughout this period. Meta's given back most of its earnings gains. It fell back under 500. Things get a lot more bearish on Meta below 480. Netflix gets more bearish under 600. Nvidia, I should check that out. So Nvidia is pretty far below gamma neutral now. Wait. Hold on. Why isn't that loading? Just shut the bed on me? Okay. Alright, never mind. Jensen said they were never building them at scale. It doesn't matter, right? They're not building them at all. So I'm late. I have to watch later, but quick question. Friend said if SPX falls under the 20 DMA, then it will just bleed down and down. Do you agree or think high vol up downs throughout? I don't agree. I think increased volatility is probably going to lead uh to probably several bounces. I mean, there's going to be profit taking at some point. Also, we're below the 50 MA and we're under the 30 EMA. I don't have DM. I don't really use DMAs. I think they're useless, but we can take a look at it. We're pretty far under that. Is he talking about on the weekly? I would say just losing the 20 MA on the weekly is pretty bad. That puts us on a pretty direct path down to like 4,900. I can't say that I like DMAs very much, but they're just really lagging. But we lost the 50 MA pretty significantly on the daily Friday, right? We did not regain any of it. We left a double gap to the upside, and the bounce was pretty weak. We still haven't lost the 552.64 level on SPX, which I think is you know, the next real bear trigger, right? Like that's where we're gonna see probably the next big move out of CTAs. If we start selling off below 52.64, that's gonna be really bad for maybe a decent period of time, because that's going to be like 200 billion in sell side from CTAs. I didn't have any data for Nvidia. I don't know why it's getting like a gateway issue. Oh, there it goes. Hold on. It's fixed now. Oh, hey. Cool. So important levels for Nvidia are going to be 100. It looks like there's really nothing bullish on the chain until it gets back up to 115. There's a little bit of support at 105, and the next downside test looks to be 100. So it's got a little bit of it's got to do a little bit of climbing to get back to where the bullish positioning is. It could bounce off of delta neutral though, or gamma neutral. It's bounced off gamma neutral a couple times. Over the last few weeks, Friday being one of them. Delta's been falling off pretty steadily. Gamma's still slightly positive. Yeah, I'd be careful because it could bounce pretty violently. Sorry, we're talking about Nvidia here. I would say that if it does bounce off of that 105 level again, which it kind of looks like it did Friday, and it cleared 105. Yeah, if this bounce were to continue Monday, I would say it could move up as high as 115. And then that's where I would look for a rejection. If it loses 100, very bearish. But I probably wouldn't trade the current range. I'm assuming they'll touch on the carry trade with Jorik and JFresh. Yeah, actually, let me go grab them because it's already like 1:30. What's up, nerds?
What's going on?
Well, they should
Finally
always
back.
take my advice and take it out of their butt, right? I always take it out of my butt at that point.
I don't get paid enough for this.
You don't get paid at all.
Yeah, none of us
I
get
know.
paid.
Oh, yeah, Girk, I beg to differ on that one.
Okay, listen, I risked my own capital on those September 4550s, and they're actually just a tax bill. There's nothing
Look
like
at you.
picking up $500,000 and then giving it all to the IRS.
It's the best.
Yep.
How are you doing?
Doing all right. Bonds are rocketing though, which is nice. Because owning those is really boring.
I mean, dude, the fucking yield curve has done some crazy shit.
I know. I wanna just dump all of my bonds while they're up before someone fucks something up and everything snaps back.
Yeah, it's gonna be fun. There's so much to talk about this week. I'm so excited that I'm finally back. It's been a long 3 weeks.
It has. It's been very long.
I would,
But we're getting so close to shilling everybody our stuff.
yeah, the market can't crash until we release the beta. That was like the rule, right?
Yeah, imagine
make it.
I can't wait to launch our product into a dead market. It's gonna be the
perfect
best.
timing.
Yep.
It's gonna be awesome.
All the people without jobs are going to get desperate and start day trading to try to sustain their lifestyle, and we'll be able to peddle them data.
Ooh,
That
interesting.
sounds
That's the opposite of what
depressing.
happens, but
Yeah.
historically, at
Also,
least.
I don't want any of those people trying to give me feedback on the beta.
That's true. Very true.
What, you don't want TikTok and like paper traders commenting on our data?
No.
Uh,
I want to make that very clear. The I don't want you. Don't sign up. If you have signed up, don't accept the request when it comes through your email.
Sam, as
Dude.
always. Should we talk about Claudia Sam unblocking us?
Yeah, that's what I was gonna say. Claudia Song did a mass unblock. I think she realized that she blocked what would consist of her entire actual audience on Twitter, and must have just done like a 1-2 reversal so that she had people who could listen to whatever she was saying. What is she up to now that I can read what she's saying?
I think she's trying to undermine her own economic indicator, which is hysterical.
Oh,
Yeah.
because yeah,
Yeah,
because she's
that's been
she's
all over the
bearish now.
news. Yeah, that this is the one time in the history of MACD for unemployment that the trigger is not correct.
Yeah, incorrect trigger because unemployment is so low compared to the historic average, which is like 5.7%, right? But no, her indicator is usually right because it's so fucking far behind the curve that it can't be anything but correct. um uh which is, great when you have a
Hold on.
12 month lagging MACD.
I don't
Um
like that because when you say it like that, it sounds worthless.
it is.
Uh,
Yeah. It's a pretty shit indicator. But it's accurate because it's literally just looking at the past.
I made a chart to show how credit conditions are about to tighten.
Ooh, let's
It's
talk.
just the yield curve over time.
Yeah, of course it
Over the
is. We
last
love
month,
those
it's done some
charts.
crazy shit. Like, look at what the long end did just over the last month. Like, it's fucking insane. And I haven't been able to watch
Ouch.
over the second half of the week, but I've been checking in on these things, and between that happening and uh, like high yield spreads took another jump. I think we're actually going to start tightening financial conditions here in a bit.
Well, especially if we get anything that indicates inflation.
Yeah, well, inflation or recession, right? Because just general risk goes up.
Yeah. I think we're
So,
falling more towards recession now, but everyone's pushing back because deficit spending's keeping the GDP up, right? So
well,
everyone's
how
like,
long
"Oh,
before the economy?
this isn't a recession." Well, the problem is the yields, right? I mean, Yellen's gonna fucking bankrupt herself trying to pay for all these bills. She should have been
How long?
issuing coupons already, and she didn't. She didn't fucking. They're not issuing any more coupons this year. I mean, they're just gonna keep the rate the same as the first half of the year.
Yeah, it's dumb.
Yeah, so
yeah,
she's still
she's using it.
yeah, she's still choosing like liquid cash over long
The
term debt.
the infuriating thing about it is the gaslighting. Like I'd be fine if she just like admitted that she was goosing it. Oh well, I wouldn't be fine, but I would respect her more to be like at least be truthful. But all of this just like dismissing the claim that they're goosing the market. It's like, oh, that buying, selling bills doesn't do that. That's silly.
We're in a recession, yes, but what about depression? That's just a bigger recession. They're,
So we
they're
don't.
not too far
So
from each other.
we're not in a
I'm
recession
still,
until the economists start blaming teachers and poor people for what's going on.
Yeah.
I'm not, I'm not sure. I agree that we're in recession for some of the reasons that you already described.
Yeah, well, it's tough, right? It's tough to. It's kind of like stagflation, right? Like the empirical definition of stagflation is a flat or declining economy and increasing inflation, right? But we have all of the effects of stagflation right now. We just don't have a historic precedent that what is currently going on is stagflationary, right?
Yeah. But
And
also,
so,
this is 1 month of data, and we all know. I mean, we've all been tracking this shit long enough to know that 1 month can provide very misleading information.
well, I mean, Jolts has been pretty consistently declining for a little while now, right? Hold on, let me pull up that chart. I think I have it somewhere. So I wouldn't say it's
Oh,
just like 1 month where we're showing damage to labor, right? I think the bigger issue is that we're seeing it happen so quickly. And that's generally
yeah,
what
but
happens is like the labor market breaks down as it accelerates really, really fast.
I think what's going on though is a little bit more complicated. Obviously, I don't have the data in hand right now to fully support this, but I want to at least plant the seed as a possibility. Um, I've talked a lot about in the past about eating the inflation shit sandwich. And one of the ways that companies resist eating the inflation shit sandwich is that they lay people off and fire them so that they can keep their profit margins up
Yeah.
for outputting the same amount of things. The problem with that is that that only can help you in the short term, and eventually you're going to have to hire more people to actually maintain your output, right? So they're basically just, short term shorting labor so that they can get some of those short term benefits. And I think a lot of that is why the unemployment has been going up, but there's nothing to say that it's going to keep going up. It can simply just turn back as if the economy is otherwise strong and money is moving. Eventually, they're going to have to hire people back to actually maintain that output over long periods of time.
Okay. Yeah, I agree. Um,
But there's I think that there's a thing though, there's a certain threshold, JFresh, where if enough companies start doing this at the same time, then overall demand drops, right? And that's kind of in aggregate, are these companies doing this is the bigger kicker to that question. I mean, if the overall demand drops, then that labor that they dropped off, they're just not going to want it back until demand picks back up.
But where's all the demand coming from this
The
time?
government.
Which is unique to all of the other times that this has happened, right? Because the government is pumping so much fucking money into the economy. They're insensitive to the unemployment rate. And if anything, they react the opposite way, right? As unemployment goes up, the government is incentivized to spend even more money, right?
Yeah.
So in that regard, I'm still not convinced that we're in a durable recession, simply because the government is spending too much money. The deficits are growing too quickly for that to really be possible. The question remains, though, I always think about it in terms of in GDP, and the question remains, how much of that spending is going into inflation or into actual growth? And that I don't think anybody really knows. I mean, with the way that the population has been growing in the last few years, I mean, off the charts, immigration. Um, I don't think any of our data is reliable at this point, to be frank.
I'm kind of with you on that.
So that's why I'm still kind of sitting on what is happening on a year over year basis, because anybody who's digging into 1 month of data, which everybody on Twitter is doing, I think is a waste of time, and I think is false positives. Whatever they find in either direction is going to be a false positive. You have to look at year over year. And then everybody's complaining that oh, the Fed made a policy mistake. They should have cut rates at this last meeting. Um, no, they fucking didn't. Like, yeah, they're going too slow. Everybody is going to think that they're going too slow because they are, and they're the lag in the data, the measurement of the state of what is too. I've talked about this many times before, and it's going to happen. It's the measurement, the reliable measurement of the current state of the economies, the lag on that year over year at least. Ideally, you'd want a lag of 2 years to really get a sense of what's going on. It's too slow for the Fed to ever reasonably stabilize the economy. They're going to always be too slow in either direction.
Yeah.
So yeah, so we're going to hear a lot more of that, and it has nothing to do with the policy decisions of the Fed. It's just simply mechanically the way that the system is set up. The Fed cannot stabilize the economy. It's not possible. Anyway,
I
nobody
mean,
else is talking. I
it's
just will keep talking until somebody else chimes in.
um it's not that they can't, right? It's just that they won't, right? I mean, there is a path for the Fed to, regain some of their power, but they've not taken it, right? I mean, the biggest fight they're putting up now is just not cutting rates and giving Yellen what she wants, but the bond market's cutting the rates for them, right? And so, I mean, the most the most damaging thing JPOW could do at this point to regain any of that, like actual power over monetary policy, would be to just keep rates where they're at in September and in November and December, right? And just simply not cut. And if they don't
Well, so
cut,
like
I
the
mean, they're
thing
they're
is,
going to
I mean,
force the Treasury to stop issuing debt, or at least
that's
short-term
the
debt.
that's the biggest issue, right? Is it's kind of chicken and the egg. I mean, do we really blame rates for, whatever's happening in the economy right now? Should we blame rates for what's happening in the economy right now? I mean, I posited back in like mid 23 that we should have cut rates then or something like that. Whereas like we really should cut rates now, and it'll tighten credit, and we'll get our, dip, and then we can raise rates back up again because inflation's going to go up. And you Jay Fresh is right. If you end up with a lagging reaction function, you basically create not only an underdamped system, but you create like a positive feedback loop where you create these cycles that are more and more extreme. But
Well, you say it like it's a choice, right? But they can only react to the current state of the economy, and they can only be certain. They can only have sufficient certainty in the current state of the economy on a lagged basis. There is no such thing as a current measurement of the state of the economy. It's all lagged.
right, but you can well, I don't know why you wouldn't want to try to game out the outcomes of adjusting the federal funds rate just mechanically in the credit market.
I mean, it's not monotonic.
It's not, but because it's either way, you're reacting to old data or you're basically throwing darts at a dartboard, right?
I mean, here's the thing though. If you want them to do something like that, make decisions based off of market movements. Um, Now you've got a situation where they're overreacting, right? And they're going to create chaos in that way. I mean, imagine if like every 5 days they change. I mean, we've talked about this before. The Fed should just have a random number generator to generate that day's rate, right? And every day it's just like, oh shit, the rate's -9%. Oh, it's 12%, right?
Well, the
that
thing is,
would that would tighten credit because of the uncertainty. And so
the Fed is
yeah,
operating in
there's
a vacuum, though. Like that's the biggest issue is that they're adjusting the Fed funds rate based on U.S. economic data and not really on things like global credit spreads. Like if they're aware of the carry trade being used as a proxy for availability of credit,
they
then
have
what they
they
should
have
do is
so
spur economic growth, or sorry, to stanch economic growth, is they would, reduce that spread, not collapse it, but reduce it a bit, so that, that would
They
actually help.
literally can't do that. It's not in their mandate. Like that's what I'm saying. It's structurally, mechanically built in a way that the Fed cannot stabilize the economy.
Yeah, I mean, for the Fed to step forward and make a decision based on the availability of credit elsewhere due to FX spreads would be way outside of their mandate, right? Um, I mean, there's no way you'd ever get all of the Fed Board of Governors to agree to like a cut for that reason anyway, right? You would just stay on track and assume that, that spread will narrow over time due to economic factors, right? And it has, right? Bank of Japan has been forced to raise rates and cut back bond buying because of the damage that that spread is doing, right?
Right, and that's the thing, is we have to, that's the biggest issue with it, I find, is that, as part of the whole system that JFresh describes, is that, the outcomes that we want only come at too great a cost.
Yeah, I mean, well, it's hard to be the president of the Fed, right? You have to slow down the economy and inflation without destroying wealth, because everyone forgets their third mandate, which is keep rich people rich. And you really can't have two of those without the other, right? So, I mean,
Yeah, that the Venn diagram of those three things doesn't overlap.
yeah.
Yeah, that's
So
it.
there is no perfect solution. There's just whatever solution they can achieve to get, two of those in better balance. And I mean, right now, right, as we tackle inflation, we see labor, being, and we're not really tackling inflation, right? It's just being seasonally adjusted away for now. And then
Yeah,
hopefully by the time it's seasonally adjusted back, it'll be lower. But even with just the inflation adjusted away a bit, right? We're seeing the immediate damage to the other side of their mandate, right? We're seeing, labor markets decline rapidly, unemployment's going up really rapidly. I mean, it's so they're so unbalanced in their positioning that they simply there's no way for them to affect any kind of, balance or equilibrium in the market. Now, if the Fed were working with the Treasury, right, and the Treasury wasn't working against the Fed, sure, we could get, labor and inflation in better balance. But I mean,
But the
Yellen's
Treasury is
Yellen's just driving up inflation as fast as she feasibly can. J-Pow's trying to, reduce it by keeping rates flat. And I mean, honestly, the Bank of Japan has just given J-Pow an excuse to not cut. That's really all they did, right?
So Yellen is in a tough spot, right? Because she has to appease the fiscal side of the equation, and she's trying to do it in such a
or she
way.
doesn't.
Well, she does. She has to finance their spending packages.
Right, but she can make it painful. She's under no obligation to appease them. She can say like, "All right, we'll spend this money, but it's gonna fucking suck."
Well, she's already doing that, right? But she's making it suck in the short term and driving up
No,
deficits.
she's allowing it, right?
Yeah, but the thing is she's probably thinking 10 years down the line, do we want to be stuck at a 4% rate on all this fucking debt? And she's like, no. And she's gambling, right? That rates will come down in the short term by doing this. And then that way the US could quickly slough off this high interest rate debt. But it's a huge gamble, right? Like, where are interest rates going to end up landing when the curve de-inverts? Nobody fucking knows.
But you see this the signaling that she's making is an appeasement, and it is not she's under no obligation to do it. Because if by her issuing all these bills, she's telling Congress, "Hey guys, don't worry. All of this deficit is from interest, and we're all in bills. We're good. Once rates come back down, We'll get that deficit down, and we'll be okay. You guys don't have to make any hard choices right now.
But she's under
We just
she has no power to dictate the path of fiscal spending. She really has no
but she,
power in that sense.
but the alternative is, hey, I don't care how much money you spend or what rates are. I'm going to issue coupons in the roughly historical ratio that we're going to issue them. And if you don't like the fact that you're going to be paying all of this interest for the next 20 years, then maybe you should fucking write a budget.
No, that's not a solution.
Yeah,
Like it's no, but it's terrible. It's a terrible solution that leads to austerity measures and shit like that. Like it's incredibly dangerous to play that game. And maybe yeah, you do quote unquote.
it's not a game.
That's just responsible management of our deficit spending.
Right, but at what cost? Once again, like now you're saying we fuck ourselves over for the next 30 years, lose a generation because we get
Why
down.
is it 30 years?
I guess it wouldn't be 30, it'd be 10, huh?
You can pay off that debt early.
You can, but would we be able to, considering how huge the deficits are?
We could destroy it.
Yeah, that's like, that's what I'm saying is that the course that takes us down, Fresh, is to me, when you're thinking in the context of our entire nation's creditworthiness, is incredibly dangerous. And I see why she's going for short term now. And I don't disagree with you that if we were a business or something like that and we were issuing, bonds to people, yeah, I think you're right that we should just keep issuing bonds the same way we have been. But if we're talking about the entire nation and we're talking about, locking ourselves in at a crazy spend on interest, that when there is a chance that we don't need to do that, I would take the risk that, rates will go lower. And if they do, if the curve de-inverts around like, short end at let's just say 2-3%, right? Maybe 3.5%, that long-term interest is going to be much more palatable.
Right, but you're just communicating to Congress that hey, you can continue to spend recklessly. There will be another time where we're going to have to raise rates again, and this problem is just going to get worse and worse and worse.
I don't disagree with that at all. And I'm just saying it from a you know
From a business
money.
perspective, if Yellen is the treasurer and Congress is the board is not meeting their fiduciary duty to the interest of the company right now. And so you as as the treasurer, you have to do what you can to try and get them to meet their fiduciary duty.
China, you owe us money. USA, LOL, no. Yeah, I mean,
Replace China with Russia, and we already did that.
yep, yeah, which is definitely scaring China off from doing anything else. Companies don't manage a global reserve currency. I mean, you guys are both right in your own way. I mean, yes, Yellen could create a world of hurt for the average American by issuing longer term debt, but she doesn't need to issue 30-year debt, right? She could just turn the issuance up a little to the 2 and the 5-year, right? Or the 10-year. And keep that period of compression shorter, much shorter, right? She doesn't have to go out to the 20 and 30 and start issuing, tons of coupons out there, right? Um, but it would remove the upper limit of what Congress is able to spend, right? Because at this rate, the TGA drawdown is going to bankrupt the Treasury. I mean, she's on all those bills, she's got to fork that fucking money out of the TGA account by within 3 to 6 months.
Yeah, I mean, yeah, that's what happens when as she goes to shorter duration, it requires her to maintain a larger TGA to handle the turnover of that cash, which is a whole other issue, which is also in and of itself that's also actually kind of deflationary because it's sucking money. One of the only places you can pull money out of the economy is to put it into the treasury account. but it's getting cycled, so it doesn't really matter, right? It's still flowing.
Yeah, I mean, she's keeping money out of RRP, which is the goal, right? That's really the goal, is you stimulate growth by pulling those short-term overnight repos back into, assets where they're going to drive speculation. And that's all she's really done. And if she cuts off the bill issuance, all of that money is going to go right back into overnight repo because the Fed rate's 5.5%.
Yep.
And then,
Yep.
then all those money market assets are going to decline, and there's, nowhere for them to go, and people start buying bonds, and that'll put, the Treasury deeper into debt.
I have a chart.
Oh,
This chart basically describes what we're talking about. It's not M2.
no, it's M1, right?
That's right. Yeah, the velocity of M1 tells the entire fucking story.
Yeah.
It's fucked, dude. Like she's fucked, J-Pow's fucked. Our federal government is fucking clueless, right, when it comes to anything that has to do with, maintaining a stable currency, maintaining a sustainable economic growth path. And like the only real thing that is keeping us afloat at this point, Jay Fresh alluded to it earlier, is immigration.
Yeah. We
Yeah,
did
which is
actually get some productivity gains this month, but still only 1 month, right?
Purely from immigration, though.
Yeah.
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 So it still makes the domestic population very unhappy because all of the perceived healthiness of the economy is just coming from more people, and they're just not correctly uh, deflating that effect because it's so off the charts that they're just not accurately doing that. So we're literally just calling inflation productivity right now.
Do you remember Jay Fresh when we did I think you made a histogram of the population changes, and then like in 2020 we had like a 2.5 sigma move in population growth.
Yeah,
Yeah,
it's
it's
absolutely stupid. By the way, the person in charge of securing the border, Kamala Harris, we're gonna put her up to be the next leader of the free world.
uh, dude. They should have just brought up Andrew Yang and
Dude,
made him.
M2 velocity is going to fucking plummet.
I think it's gonna rocket.
With the
I think
carry
it's gonna
trade
rocket.
breaking down?
Yeah, it's gonna go nuts, dude.
No. No way.
I think so.
Mhm.
There's nowhere to. Where are you
That's
going to cycle the money?
that's why I think Dixie's gonna tank.
All right, that's going to happen, but that's just part of the carry trade breaking down. This
Yeah,
is this is
velocity's
like
gonna
a
go up.
collapse, and that should lead to a collapse in velocity, not
Well,
an
maybe
increase.
why don't we walk through what an unwind of the carry trade looks like mechanically? So what are the participants doing?
So let's
Well,
think about the position, right? So the position is you are short the JGB and long the Treasury, right? Because
Mm-hmm.
you borrowed yen, which makes you short the JGB, but you're also in essence you are short yen,
Yeah,
and so now you're long dollar, long Treasury, and that's just the exchange rate risk, and the spread is like your yield to maturity risk. And then you just hedge that currency spread over like continuously over time to make sure that your interest payments remain constant in USD.
yeah. So now unwind it. So
So
we're
you're gonna
so
dump.
I think well here's one thing I think you're missing. I think they're collateralizing hold to maturity assets to initiate this trade.
yeah.
Well, they're collateralizing everything, dude. They're doing collateral swaps on junk bonds and all that crazy shit. Everything is a treasury in the financial system right now.
Oh God, I mean I hope not, but you're probably right.
It's pretty much what we always do, right? I mean, if I got, some fucking BBBY bond bags that are not never going to pay out, I go to
Okay.
fucking
Let's
credit
for the
unions.
sake let's for the sake of argument, at least for the beginning of this discussion, assume that all of the collateral for this trade is underwater existing U.S. Treasuries, and then we can talk about what would change if some of them were junk bonds and other things.
Well, I mean, it's best to just assume the pure position without worrying about input, right? And just say this is the position, right? The position is net short yen JGB, net long dollar UST.
Mm-hmm.
So to unwind
Well,
it, you would end up with a net short dollar, net short UST move with the net long JGB, net long yen move.
so here's the challenge with that. Treasuries are dropping, or treasury prices are rising.
Yeah.
That's correct.
So if this trade is unwinding and treasuries are rising,
What makes you think the trade is unwinding rather than levering into bonds? Like so I say long US Treasury, but there's a lot of other things that happen, right? So if I wanted to lend someone money for a down payment on a house, that would be essentially my quote unquote treasury now. It would just be the debt of Jim Bob down the street buying a house. So it's very diversified, but if it's concentrating into bonds, this is the kind of move you would see still using the carry trade, but
Hold on.
actually just buying
so
treasuries.
what's going down?
Hold on. Hold on. Hold on.
Some some form of credit somewhere has to be
The
going
first
down.
thing that has to happen is that assets have to be sold, right? Because you
Yeah.
have to maintain
Okay.
your margin ratios. And in order
Please
to
don't tell me they're using the carry trade to buy equities.
they have been.
I'm gonna.
That's what they've
I'm
been
done
doing
now.
all along. Where do you think the short vol leverage came from?
Yeah, but they haven't deleveraged that. That's still all
They're
there.
starting to.
I put a little chart in the chat, Jay Fresh, to
It's
show you
Okay, here,
all
here.
this.
all of what's happened so far is Delta has just transposed from calls to puts. Like that, nothing's closed.
I mean,
All those fucking all those fucking puts are still there.
buy to open delta on puts, same like sell to close.
So I made a
Yeah,
chart,
but
Jay
what I'm
Fresh.
saying is the total delta in the market isn't changing. The leverage, the overall leverage is still there. It's just transitioning from calls to puts as the price goes down.
Jay Fresh, look at my Bama Lama Ding Dong chart. Okay, this is an early move, right? Because we don't have Friday in here yet, right? Because this thing's always a day behind, so we're gonna get it like sometime in the morning. But if this bounce in the red line, which is the high yield spread from AAA, if that bounce continues, then we could be looking at the deleveraging of the carry trade because this is showing, people's willingness to lever into low quality debt.
What it remind me what this it's the rate it's the difference between high yield AAA and what?
So red is the spread between high yield and AAA, and then green is the spread between triple B and AAA.
Okay. So people are selling off the riskiest shit.
They could be, yeah. And if these spreads continue to move up, right, which means that the yields on lower quality debt are increasing, then that would tell you that, one of two things, most likely both, reticence to, buy that debt or finance it, and two, perhaps people are willing to part ways with that debt at lower prices. So that is that, and that pretty much would be a sort of almost direct link to the carry trade because this debt is financed directly by the carry trade.
Mm, yeah.
This is prime lenders and shit, right? This is your fucking JPMs and shit who are controlling these
Okay.
spreads.
So let me posit this. So okay, so they get into the JPY carry trade and they'll buy some treasuries to hedge their underwater shit. They'll also get high yield, riskier stuff because they want to get their
Looks
yields
way
up as
better,
much
Dave.
as possible.
It's looking better.
Um, yeah, fine. And as the trade unwinds, you're obviously going to sell your riskiest stuff first and try to hold on to the existing stuff because you don't want to get squeezed. So you're trying to unwind as orderly as possible. So
Yep.
you pull that money back, close the part of the trade that is levered long into high yield, and then take the money that you get from closing that and put it into bonds.
Yep.
If this continues to unwind, eventually this will turn around and bonds will start going back down again if people get net short. And if it's being leveraged by underwater hold to maturity assets, then credit will have to tighten because they're underwater and they can't pretend that they're not anymore.
Right, but credits are if the beginning stages of this already mean tightening credit, but what you're describing is like the later stages of this kind of a cycle, and if that ends up happening and people get margin called on their treasury holdings, then we're looking at, at least in a small scale, but at worst a large scale sort of accident,
Yeah,
and that means a people are irresponsible.
I would just like to say shout out to you and Gert because I'm not a bond person, and because you guys do this, I don't feel I ever have to be a bond person. Um, or I would say a credit person in general. You guys have been talking about the carry trade for a long fucking time. And
Yeah.
now everybody on Twitter is a JPY carry trade expert. And
Hmm.
I can't tell you how many like wrong, like bald faced wrong things people have said while they're trying to explain it, like saying, "Oh, you go long JGBs." And it's like, no, not really.
No. I
Yeah.
mean, to some extent, yes, over time, but I mean, probably the fastest payout on that trade is going to be Nikkei, which is why I've been like short Nikkei long yen, right? And my long yen is finally like at break even after I've had to roll it for 2 fucking years.
Yeah,
But my short
I just
Nikkei is killing it.
Yeah, I just bought yen because
Let me
I
try
didn't.
to simplify this a bunch, right? So as assets are sold off and people go long bonds, the yield on the 10 2 year spread is going to increase, right? And that's what me and Dork built all this time ago, right? With this indicator. Um that spread's going to increase, but as that spread increases, so does the forward yield on volatility, right? Because if you're going long bonds, you need to hedge vol, right? And if the forward yield on volatility is positive, that increases your and every other bondholder's demand for that volatility. And then remember that FINRA manages margin based on closing price, right? So, yes, you're right that at the end of the day, when you're looking at that data, there's not a lot of relative change there in the delta. And if we go down to like the 15-minute here, right, we can see
Hold
that.
on, I'm not looking at the stream. Give me a few seconds to pull it up.
Okay, yeah, no problem.
God, that chart is so awesome.
I know it is, but I finally
It's
gotta
so
I
great.
finally gotta dive into how fucking awesome it is, right?
Dude, this chart is so beautiful,
Hold
dude. Like
on,
I think
I'm
people
getting
underestimate it.
Oh, I
I'm
don't
getting an
underestimate
ad.
it at all. You're getting an ad? God damn it.
I'm
Turn
getting
them
an ad
off.
for something called Bravo Date,
I don't even know what that is.
and it's
Sounds
just
like
a
you should.
bald guy in a green jacket holding a puppy and a lady. I don't even know what's happening, but
Did he find true love?
I don't know.
That's
I guess it's to be continued.
that's Farmville, I think.
The bald guy in the green jacket holding a dog with a red scarf is Farmville. Farmville
That's
cannot
Farmville in
afford a
2 years.
jacket.
Set faces to gloat. Yeah, all right, can you see it now?
Yeah.
So I'm going to show you the beauty of this. So right as the yield curve, or the 10-2 specifically, 10-2 year spread uninverts, right? The demand for volatility rises, right? And this is where VIX hit like 30 in the intraday. But by close, they'd gotten the forward yield of volatility back down to 4%, 4.18%, right? So the intraday high on that was 39.15%. which
God damn,
exceeded
dude.
the forward yields, right? And so that's why we saw VIX go ape shit in the middle of the day, even though price of the indexes wasn't moving at all, right? VIX just kept going up and up and up and up and up, and we only dropped like $50. It wasn't like
I
that big
know
of a
that was
move, right?
insane. I was like,
And,
how are we getting near VIX 30 and the price is just like, I mean, yeah, the market's going down, but it's not going down that
and so
bad.
so they managed to stabilize their margin positioning against the asset sell off in the carry, right? And if we look at the carry has declined from almost 9x leverage down to 7x leverage, which is pretty significant. And that's how much effect just that 15 bip move on the Japanese fund rate changed things, right? Now imagine a Fed rate cut, right? That'd be far more impactful. But I'll give you me and Doric's version of the SOM rule. If the forward yield of volatility closes above the forward yield of the 10-2 spread, we're in a crash.
Yeah, pretty
And
much.
that's because margin across the market will explode. And you can see the historical evidence of this happening if we go back to moments where we almost crashed, like April of this year, October of 2023, right? Um, and then, the bank failures, it almost happened again, right? Very briefly, but almost. The rates were negative going into the bank failures. But if we go back to like 2022 or 2020, the COVID crash, right here on March 12th, volatility closed over the 10-2 spread. The peak was at 64.69% yields.
Even the beginning of March
2008,
too.
yeah. Where?
Oh, just right before the crash too. It was because bond yields went down, or spreads went down, but
Oh,
you
here,
could see the
yeah,
spreads collapse. Yeah.
yeah.
So yeah,
And then if we go back to '08, same thing, right? Bear Stearns here, and then Solomon, and then Bear Stearns, right?
yeah. And and so another thing to note is this only really like this rule only holds true during an inverted yield curve too, because like all that space that you're seeing there is fucking money printer go burr, right? And the
Well, it
yield
only
curve
holds
is
true if they're
an
both
inversion.
positive, right? Like you can't have
Yeah,
if
yeah,
one's negative, the other's positive, then no. So like that period here, in 2020, right, where the forward yield on the 10-2 spread is negative, this doesn't count. But
yeah.
when they're
That's true.
both positive, like here on March 12th, that's it. That's when margin breaks in the system. And you can see they
Yeah,
desperately try to relever this as the market's just tanking, right? And try to reverse the breakdown of that. But now, back then, the carry trade was like 1x levered. It barely had an impact, right? And it only been levered up prior to that through like 2018 as the Fed was hiking rates. But now we're at 7x leverage.
yep.
It'll be
And the
fun.
spread only collapsed from one side in 2020. So if JPOW cuts rates, this starts collapsing from both sides.
Yeah, your Huckleberry asked, can you talk about speed of communication factor for this time around? I'm gonna make a statement. I don't know if it's correct. I don't think it's gonna be that much different between now and 2008 because communication was already fairly good back then. Um, and margins still assessed on the daily basis, and I feel like we were at the speed of daily transactional, speed in 2008. So I don't think there's a whole lot of difference in the speed of communication. Now, the one thing that's different is obviously the volume of zero DTEs and all of these very short dated instruments and what effect that's going to have. I don't know because the last week has been pretty interesting. We've seen a pretty interesting shift in zero DTE behavior. People are nowhere near as short zero DTEs as they were before. So,
Oh, is that a
um,
has to be.
This is a good question, Dork. When we say 7x leverage, what does that mean for us in smooth brain terms? Like, is every yen being lent 7x for USTs? Hmm. How should we describe our synthetic carry swap?
Or really, I mean, aren't we really looking at like the yield to maturity spread on
Well,
it?
we're looking at the 10-year US plus 10-year JPY times the value of dollar against the yen.
Yeah, so this basically tells you essentially like the value of your collateral or
Yeah.
the value of your collateralizable assets. So it's not necessarily like every
Against the US JGBY spread.
yeah, so it's not like for every, you know, one US or for every $1 USD of yen, you're getting 7 USD out of it. It's not like that.
I would
It's
say
more
it's more like for every yen you are short, you are well, for every dollar you are long, you are short 7x yen.
yeah, that sounds about right.
yeah. So the risk is high.
Tremendous.
Yeah.
I have some
So
money
it's like
coming.
short. It's like shorting puts. Kind of the same thing. Your risk just goes. Your
Yeah.
risk of loss becomes much larger than what you originally put
Except
in,
with
right?
shorting puts, right? You get blown up and you close it. With this, as the value of your leverage declines, you then have to sell assets broadly in order to meet the margin requirements of the assets you have levered, right? So, and this is what killed the market in '08, and this is why the carry trade is so important. First of all, the Japanese economy, and like a lot of people will talk about like, oh, they're going to go to the Swiss franc or they're going to go to the Australian dollar. The entire Japanese financial system is built around facilitating this trade. It is deeply liquid. It offers the availability for extreme amounts of leverage on very small amounts of margin. Um, like you can get 10 to 100x leverage in Japan trading versus like, you know, the US where you're going to get like 3x or 5x, right? And and so you know, their ability to handle the ramp up in M2 velocity is unmatched. I don't even think Europe, should our spread against the euro ever get that wide, which it wouldn't, would be able to handle that demand. Like Japan is just, it's built for this. They've been doing this with Japan since the 90s, right?
I mean, yeah,
Um
where do you think the meme about the Japanese day trader losing all his money and being millions of dollars in debt came from?
yeah, exactly. And so what happened in '08 was, you know, they had banks that were involved in the carry trade as it collapsed, had to start selling real assets, right? So they had to start selling their MBSs and their treasuries, and they had to start selling their CMBSs, right? And they needed to do this in order to meet the margin call requirements of maintaining their leverage in the carry trade as it was collapsing, which become exponentially higher the more the carry trade collapses. And so when like Bear Stearns went to go sell their MBS, so many people had already sold that their value of their MBS had dropped to the point where they had already become insolvent.
Yeah,
So remember, anytime you're hitting any asset market with huge amounts of sales, the value of that asset is just rapidly declining. And that only further widens that spread, right? And so, you know, it's kind of like exponential margin debt that occurs until everything is just sold and everything collapses and everything fails.
would you call it the mother of all SLDs?
Kind of, yeah. Well, I mean, no,
Can I
because they would have been selling already if it was the mother of all SLDs, not
can I
after the fact.
I really want to bring in since we're talking about the carry trade in relation to volatility as well. There's this question: does the over vixing give MM more room to crush vol? Which I believe what they're saying is since volatility is so high or IV is so high, does this incentivize the market makers to lower IV to crush it? First of all, market makers don't really do that in this
Well,
sense. So, here is what's going on, and this actually involves zero DTEs, and I think this will be an interesting mechanic going forward. Um, so the reason that market makers love zero DTEs on the indexes is because specifically for the indexes, they're pretty short contracts on the index. So like the SPX, for example, and a lot of the SPXW as well. The tails, they're pretty short. They want to hedge that. And so in comes all of these sold zero DTEs because people are trying to, scavenge returns on a very short time frame. This allows the market makers to hedge all of that, all of those short tails by buying all of these zero DTEs from people who are selling them. And it's the zero DTEs that they are using to hedge against volatility. So, what happens when people stop selling all of these zero DTEs and then start either buying zero DTEs or just not really trading them when they become more in balance, bought, sold? Now, now the market makers no longer have a good hedge for their tails, so they have to hike the price of those tails to try to incentivize people to sell them, right?
which is what we saw on
That's
Friday.
and that's kind of what we saw the last few days of this week. As I mean, we were watching. Not to shill our beta too early, but we were watching um, some of our live data stuff that we've started building. And it was marketably noticeable that they were not selling nearly as many contracts as they usually do. And so the market makers are all now sitting short these tails and they're like, well, shit, we need people to sell them. The only way we're going to sell them is to crank up the price. So the question becomes, are people going to take the bait and sell those things
I did.
to put the to put, to put the market maker in better balance, right? And it did seem like at the end of the day that was occurring, midday to end of day. Um, that did occur. So the question becomes, will that continue going forward into next week, or will there be some special thing that might happen that I'm very excited about that we can maybe talk about later?
Well,
But I think going forward, the zero DTs are spooked. We'll see what happens on Monday if they swoop back in. Um,
so
but
I want to show how like this whole thing is super reflexive, right? Like what you just described and like what we're actually seeing in the market. And so right, if we look at now I'm going to kind of go between these two charts, but if we look at the point where the yield curve inverted, right? And the demand for forward vol for that tail risk started to pick up. And we'll also take a look at cash VIX here, right? We can see in the intraday where the MM starts to price up that spread, right? So this is that spread 20, 30 days out expanding, right? In relation to that forward demand for volatility that we're seeing over here, as that yield on convexity increases, and you can see this in the contracts that the has bought, right? The contracts that short vol has sold and the is long, right? And kind of exactly what JFresh is talking about. So this is the 4550 contract that I had on Friday, that I kept teasing Dork with. And you can see how rapidly this contract prices up over the last couple of days, and then we hit the morning of Friday, right, on the second. And this contract goes from like 14 to 30 with almost no change in price of the underlying index. Right. So this is the pricing that spread up in order to encourage people to sell those contracts and sell to close them so they can get them off their fucking books. Um and I mean they were at least pretty successful for me. I mean I fucking closed them. But yeah, so just kind of an interesting way to look at how that progresses from that macro effect, filters, through the contracts, and then you see the effect in VIX,
Yeah,
where that spread is being calculated at every auction interval.
I mean, my SPY Jan 400p that I bought on, I think it was Tuesday, by Friday morning, it was up like 250%. Like
Look
they
at
were,
you. Did you
they
sell it?
were, I did, of course, but they were definitely incentivizing selling. But interestingly enough, too, to add, Girk, and this is just anecdata, but I was watching it for a few minutes while I was getting ready to sell it, and the spreads would fluctuate from like 1 cent all the way to like 40 cents.
Yeah.
uh, just minute by minute. So obviously I had to put in a limit order to get it to fill where I wanted, but it
Well, at
was just
market
super
at
interesting.
market open, I was sitting on that contract, and it was like $12. I was up from when I bought them on Wednesday, right? But not much. And we bottomed. They didn't really move a lot, and then by like, I don't know, 11 o'clock, they had hit $30. Like they'd almost doubled in value with there was almost no change on the
Yeah,
index
the
at that
market the
time.
market was trading flat. I was like seeing
Yeah.
the market trade flat, and I was like, why are my contracts so fucking expensive right
part
now?
of
And so I
part of that
sold it.
period we were going up, which was even crazier.
Yeah, yeah, it was nuts. So yeah, I definitely was gonna get on the selling train. I think everyone else was too at that point because the market maker, yeah, they were just saying, we will facilitate this at a price that you will find very attractive.
So here's a good thing to point out to people: what happens if that attempt is unsuccessful, right? They price those contracts up, and then people don't sell them, or people just start buying more of them. And that's where those zero DTEs come into play, and the market maker will start to long the zero DTE puts in order to protect from continued downside into those contracts that they've sold to people.
Yeah, they
Um,
have to blow out the spread so fucking much that at that point they're just killing themselves. And so that's, yeah, the zero DTs are a great vehicle to help sort of stanch that bleeding.
Yeah, and it did work. What they did was effective. They did get people to sell off on those tails a bit, and they managed to get vol back under control. And the yield curve, reinverted, right, a little bit, not much, but it did reinvert. And so right now we have, well, actually by end of day, did it cross back?
No.
No. Okay. Yeah, 10 years still lower than the 2 year now, but for that for that 2 hour period where it was uninverted, it got really crazy.
Yeah.
And
Yeah,
that's the
it's
value of
interesting to watch.
Vega, right? Is that as that risk becomes highlighted, the effect of Vega as it's multiplied by IV can be insane. You can have a contract that's $500, $700 out of the money with no change in price in the underlying that goes up 200%.
Yep.
No,
Or
Black Fur Matters. No, you have to sell zero. They need you to sell them zero DTEs because they are short tails right now on everything else.
Yeah.
So yeah, so you look at what the market did the last few days, and you ask yourself how much you're willing to sell those contracts for.
yeah, the overnight straddles just got so much more valuable.
I sold some 52.95s. Well, they
Well,
incentivized me to close my 53.45 by open tomorrow, 12x like they did to you guys. It depends on how much Vega you have. Like, you should have some. I mean, you're right at spot, so why didn't you sell it early? Did you buy it at the end of the day? Thanks for being the soundtrack to all my children's conceptions. How do you feel about the He's Wackenov carry trade analysis?
I
Who the fuck
mean,
is that guy?
I have no
he's
idea.
whacking off. He's whacking
He
off.
is whacking off. Yeah.
Yeah.
Uh,
I feel like we just got mowed.
I think we got. What do you guys
That could
think
be.
of this bullshit that I've been dicking around with all weekend because I was really bored?
I makes me hate that this is your stream because how dare you put that up?
Really?
This has not been vetted. This has not been.
I did. It's a drifted adjusted 1,000 point Monte Carlo sim for the next week with a 1,000 candle look back.
It just makes me hate you.
Do you disagree with
I
it?
don't. I don't. I don't know. I don't know what any of the assumptions are. I don't. I would have to see the code, but I know you got ChatGPT to write you this code, so it's probably garbage.
Well, the math was wrong, but I fixed that part.
You probably have installed. It probably put like a worm in the code, and you just installed it into your computer, and so now China is taking all of our secrets from our beta. Hold on, let me get the wrench.
You're not hitting me with a wrench.
God damn it, that was the funniest shit I had heard all night.
It's just a log normal distribution
Stop
of
it!
pro-
Stop it right now.
distribution of probable returns over the coming week.
Oh, I hate you so much.
I know you do. Someone had to do it. All right, I couldn't get
can't.
you to make me a Monte Carlo.
I will say I can't comment on it until I understand exactly what all the inputs and outputs and assumptions are. But it looks pretty.
And that's really what the hard part was, is getting that blue and pink glow.
I know you probably spent most of the time on that.
That was 90% of the time I spent on this.
Oh my god.
But now that we're moving on to the point of the stream where we do our projections, I just want to see how this lines up with what we project for this week.
Do we want to talk about Apple?
I wanted to bias us. What do we want to say about Apple?
Daddy Berkshire sold half their stake.
Yeah, it's gonna tank.
I mean,
Apple's
can we
like
talk
one
about
of the
broader
few semis and mega cap tech that's like holding all this shit up. That's the
yeah,
thing going in. So I think that nobody's really delevered their options going into Monday. So people, the whole market still wants the shit to reverse hard. Obviously they've already tried once, if not twice. I think they want to try again, and Monday seems like a good a time as any. Just hit the ground running. Maybe start right when futures open. Just try to get it going. But Meme 7 has been tanking, except for Apple. And if we open Monday and Apple just starts falling, that's going to make it very hard for them to prop up the indices.
Yeah.
So I am kind of excited to see. I think they might. I think they might fail at this.
It's a big deal.
is the sawtooth prophecy coming true?
I don't know.
I think it is.
Might be. Remember, all of this
You wanna,
selling just begets more selling, right?
you wanna know what my favorite thing on Twitter is right now?
What?
All the Elon Tesla bros are all like, "Oh, what if Warren Buffett is selling his Apple so he can go long Tesla?"
That's what GME people are doing.
Oh my god.
You know what he's doing?
Civilian.
He's going long cash. He's been on the record saying the whole market is way overvalued.
Yeah.
People are so dumb. Anyway,
He also bought like 10% of the largest Japanese mega conglomerates over the entire beginning of this year. So he's just
yeah,
perfectly positioned for yen to rocket.
yeah, yeah. Intel's just straight up crashing. SMCI is down 50% from its peak. Nvidia is down 25% from its peak.
That's one thing I've
We,
loved in our investing channel is people who are like, yeah, I bought Nvidia at 100, whatever dollars, and it's, I'm down like 20%, and people are like, yeah, man, you just got a DCA, dude. I'm not in this for the short term. I'm in this for the long haul, and you'll see in like 2 months it'll be back. It'll be up at like 200. You'll see, bro.
I'm willing to go long Nvidia at $30.
It's the GameStop effect, dude. These guys are so
mm,
greedy. Like, it's insane.
for me, it's somewhere around 15, 10 to 20. I haven't really decided yet. We're not close enough.
Nvidia, I think Nvidia is pretty fairly valued around $30, and
I,
that's
I mean,
being
yeah,
bullish.
my 2026 $30 puts sure hope so.
I mean, I think that's a fair valuation for Nvidia, considering that the AI growth is going to increase their sales. So they're not just a fucking gaming GPU company. They're, they're
in the
doing
short
anything.
term, they're not, but they will return, just like with crypto.
I just got
Yeah.
here. If you haven't already answered this, do you think JPAL will cut rates in September? Not if inflation is up. I think CPI and more importantly at this point, I think PPI is going to need to move down in order for him to have a safe platform to cut rates. I also don't think he has to because Japan already raised rates.
Yeah, I mean
So
rates are. I
Japan
mean
already took like a lot of the decision making off of his shoulders.
yields are dropping, right?
Yeah,
It's already cut effectively.
yeah, that's true. It's
It
not like
stays
I
where
mean,
it's
well,
at.
it's not like the federal funds rate was doing any damage before, right? It wasn't restrictive. Now it's just less restrictive.
What if JPAL does edge this rate cut until 2026? The
He's a
ultimate game.
he's a genius.
JPAL is the ultimate game lord.
He is a goon lord. What do we
I thought I
need
was
to
a game lord.
cross to consider a turnaround? Futures needs to get back above 5400. Really like 5465. And that's not even, I mean, we're kind of really far from an actual turnaround here, huh? We need to get back above gamma neutral, but stably. And we weren't last time. Like, we spiked above. Usually, when you get bear, I will say this, and this is something that the neutrals are really good for, is usually bear rallies will end at the, like, monthly DN or monthly GN. They will get rejected off of those. If they continue through them and close above them, the chance of the turnaround stabilizing are far higher. But usually
So,
like all through
uh,
2022, we would just reject off gamma neutral and go right back down again.
yeah, looking at, I mean, Schillinger beta harder. If you look at the combined SPX, SPXW, we just barely baby touched Delta neutral on Friday. And in this like raging market, the last time we did that was uh April of this year,
Yeah,
and
the
we
April
bounced.
correction. Yeah.
And then before that, things were more. We were pretty bearish back like from like July to October last year. But before that, we've been pinging off of it fairly well. So I would say in a credit crisis, yeah, we could keep going. We could go maybe to
I
like
could just show people that
5,000.
page.
Oh shit!
Yeah.
Yeah.
Well done. We'll give
Whoa,
the
whoa, whoa! Isn't that
Oh,
bacon whale property?
what?
wait! Don't do it.
Don't
Don't
do it.
show him. Don't do it.
Why?
I'm worried we'll give away more than we wanted to give away.
Okay. Will we? All right. Fair enough.
We gotta have our beta testers yell about how it sucks first, and then we can show it to everybody.
I put it in the chat.
All right. I'll just put it in the billionaire. I'll just take a screenshot and put it in the billionaires chat.
That's
I want,
better.
I
I'm
want,
fine with that.
I want to tease the pores.
That's fine. Tease the pores one time.
All right.
Wait, do we have to hold a meeting? Do we have to vote on it? Do we need a quorum?
Nah, we're good.
I think we only need simple majority, so Gurk can do that.
Ugh, this is gonna be the worst.
Oh man.
Now who's
Fuck
the
you,
goon lord? We are. But JPal's the goon king.
Yeah, so if this is so April was just kind of like just a breather, right? This one has credit implications. So there's it kind of like have been this whole weekend I've been just kind of been bouncing around with like basically we're either gonna rip hard or we're just gonna keep going down. Like the flat's kind of out, I think, at this point. Like we might get a day or two of flat if people are trying to turn it down or turn it up, and it just wants to keep going down.
We have a
But
73.27% chance of ending the week down.
I'm
I'm just saying.
Oh, Gurk. You're so mean.
I know.
past performance is not indicative. Future.
This is just a probability distribution based on historic data.
Historic data.
Yeah.
Yeah, be better, Gurk, is if you looked at the implied move.
I can't do that.
For
I can't
SPX.
import the implied move into TradingView because TradingView sucks dick.
Well, here, let me tell you what the
I
implied move was.
I can only adjust by HV and drift, which I did.
So the implied move on the 31st for SPX was 78 bips.
So what your chart is probably telling us, based on what you described, is what has happened in the market recently.
Yeah.
That's all I need to say about that.
Mm-hmm. it's a little better than that, but yeah.
I love you,
mostly.
bro.
I
It's
know.
very pretty.
It's so pretty.
Please, people, don't trade off of it. There's not
Yeah.
a 75% chance the market's going to go down.
No. It's a 73.27% chance that we close the week red.
No, that's not true. I don't believe that. I don't believe that data is valid.
Well,
I
let's
don't
hear
believe
your
you.
projection then. Let's hear your valid projection. You haven't been here for 2 weeks, so we're going to let you go first.
All right. Well, my projection is not valid either because it's just for fun. I think they're gonna wanna first this thing, but I also want to make this simple. What are we even at? This is a lot harder when we're not just at the same price. Let's see. 346. They're gonna go. They're gonna close the gap by. Oh shoot, we haven't even looked at economic data. What's coming on down?
There's like nothing this week. There's ISM services and then fuck all.
Ew.
Yeah.
Okay. So by 10-year note, used cars, some job stuff. Okay, I'm actually gonna. Okay, I'm gonna go a little different then. Okay, so here's what I'm gonna do. Because of Apple, I think it's going to make it difficult for them to turn this around, but they're going to try to keep it flat. So we're going to go to back to delta, just above delta neutral. So we'll probably go down to 53.20 by Wednesday.
Okay.
Then, because everybody's all hopped up on jobs and unemployment, we're going to have normal or soft claims on Thursday,
Hmm.
and that's going to give them what they need to rocket this bitch. And we're going to close the week at 54.25.
Interesting.
Neato.
All right. Dork, let's see if my chart biases your opinion.
Oh,
I mean, you
okay.
technically
So,
beat me, but I will say that our metric is terrible. We really need to fix how we determine.
are we doing the new metric then? Okay,
I
just
don't.
a straight
Well,
line up, 45 bips.
you son of a bitch. No, we've got to
Yes.
determine a new metric. We haven't figured one out yet.
Doesn't matter what it is. If we're going to be doing that like that, then I'm just going to be going with the statistically most likely outcome from the entire history of the SPX. Up 45 bips for the week. You either get that or you get me to tell you something fun. But if we're going to start getting all crazy about this,
Well,
I'm
it's
just going to
just
be like,
because
well,
so
fine.
every
Here's
week,
what I'm
here's the
doing.
problem. Every
I'm going to go
week
full risk department on your ass.
every week devolves into us trying to game each other on the end of week closing spread. Right? So it doesn't matter like what, and you've already shown that over the last 3 weeks where you're just like up and down for 4 days and then I'm going to pick a closing price. Right? So we've
Yeah.
got to have something better than that because that's just shitty and we're not doing any actual like we're not putting any thought into it, right?
I thought that was what this was meant to be, was just us fucking throwing a price onto a
I
fucking
mean, we
wall
should
like a.
we should still be at least like I don't know. We can, right? We could do a little bit of work. I try to. I try to like be
Okay.
like, okay, this will have this effect, this will have that effect, and game out the entirety of the week.
Okay. I can do, I can, I'll put a good faith effort into it. All
All
right.
right, all right.
So what we're going to do on Monday is we're going to open at 5,400.
Ooh,
And then
I
in
am
the
not
first,
prepared for that.
in the,
Oh, no, we are. I know what you're doing. God damn
so in
it.
He's
the
gonna
first
go up.
15,
He's gonna go up 45 bips for 5,400.
no, no, in the first 15 minutes of Monday, we're going to go to 54.28.13.
You're going to do like a 15 by 15 minute. We're going
And
to be here
then
all day.
no, 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 no. This is just Monday, right? Okay. And then by the end of the day, we're going to close at 53.75. And then Tuesday, we're going to open at 53.50. We're going to close the week at 53.60. There. Now it's not 45 bips. Fuck you. I think it's like 20 bips.
Oops, what did I do? 5360, you said?
Yeah.
Okay.
There you go. So we're going to fill the gap on Monday, and then we're going to fail, and then we're just going to trade flat here for the rest of the week
All right.
until
I think we
I
need
bank.
some more vol selling under 5,300. So I'm gonna go with Monday, Tuesday. We get a bit more downside move, and we get pretty close to that 5264 level. And I think that accounts for the Apple sell-off. I think we rise with the jobs data and shit into the end of the week. And then I think we slump Friday back to like spot.
Before I post the dot plot, can you get rid of that garish bell curve?
What? No, it's we're trying to beat the bell curve.
Well, yeah, but okay, fine. All right.
I want to
All right,
leave
let me
the
screen
bear.
cap it.
I can get rid of it.
Okay,
Give me a
You
second.
need to make the lines like 5 thick, then 5 pixels thick,
There, you can
so
here.
you can see them.
There you go.
all right, all right. Give me 1 sec. I got it. Perfect. This is our quant dot plot. Let's toss it.
The stream is
into-
incomprehensible for me. What? Oh, you gotta refresh it. There's been problems with the YouTube server all day.
There you go. There's your fucking dot plot, guys. Go nuts. Oh
I
wait,
can't
god
believe
damn it,
we
it was
picked
hidden
this
by the
week.
fucking bell curve. God damn it. Fucking
I
hold
can't
on.
believe we picked this week to be as boring as possible.
Kind of are boring here, huh? Well, we have some considerations, right? First, markets don't crash before OPEX.
True.
They sold a shitload of vol on Friday. VIX went like down 25. It went up to 50%, and then down 50%. And we don't have a lot of data this week, which is a really big stabilizing factor. The only thing I think could upset that in the early part of the week is ISM.
Yeah.
And then all the big shit is end of the month. Yeah, DNC, Jackson's Hole. And so I think we have a far more exciting back half of August than opening of August.
Fair. So crash in 2 weeks?
Yeah.
Crash in September.
No,
We
I don't know if
enter
we
a bear
make
market in
I don't
2
know if we
weeks.
make it to September.
I think we make it in a bear market, but we don't get an actual crash.
If we make it to September, we don't get a crash.
No,
Yeah.
what we do is we survive to September as being in a bear market or correction
I mean,
territory, and then in September we
it can't
crash.
crash until the beta is released, so we just never release the beta and then we will crash.
That's true.
That gives me a lot of time to accumulate puts.
All right.
Also true.
813 PPI, 814 CPI. Yeah, I think those are going to be the most impactful data sets coming up. Balance of trade is going to be important. Actually, that is this week. What day is balance of trade? Because that's going to be our first like big hint at PPI.
I don't think we can talk about our PPI on
Yeah, we can.
YouTube.
Yeah, we can.
Oh.
That's okay.
You call it the eye of the PP?
When the fuck is
Wouldn't it be
balance of trade?
Wouldn't it be more like an ear because of sounding?
God. Balance of trade is on Tuesday. Okay, yeah. So those are gonna probably be balance of trade's pretty important. And then Wednesday, Thursday, Friday, nothing. All the Fed speakers are gonna start coming. You know, there's like no Fed speakers. What the fuck is going on? Nobody wants to pay them to hear the same shit anymore. Daly's speaking on Monday. Like, we just had a Fed meeting. Why are there no Fed speakers? They should be coming out in force.
Curious.
Barkin on Thursday. JPow's just keeping his mouth shut. Usually he's like all over his first opportunity after the Fed meeting. Like after the blackout's over, he like goes out and gets that money.
Honorarium. It's classy.
We have a 10-year auction this week and a 3-year auction and a 30-year auction. Those are going to be important. Probably more intraday than anything else, but yields are down so hard. I'd be impressed if they didn't print tails.
Yeah, I mean yeah.
I think stability here, kind of like end of April, right? Kind of like what we got, like, well, like, yeah, from like April OPEX into the end of April, or like what we had like back in October, right, where we started to reverse, like beginning of November, where we kind of just stabilized and traded flat until the data came in. That seems like a more probable outcome to all of this over the next couple of weeks. But yeah, we'll get there when we get there. Let's see what happens this week. I think this is solid.
Yeah.
Keep an eye on, I mean, I guess I would tell people, keep an eye on yields, keep an eye on the dollar, keep an eye on the yen. Those are going to be super fucking important. Bitcoin dropped like 5%. It's bouncing back a little bit now, but that was probably not relevant. Oh, and
Yeah, I
keep an
wonder if
eye on
people are
oil and
selling
gold.
assets.
Oil and gold will be important too. All right. Thank you guys so much for tuning in. Guys, thank you for being on. I appreciate it. It's good to have you back, Jay Fresh.
Yeah, it feels good to be back.
Thanks for having us, bud.
We'll see how all this plays out, and I'll get Pickle's picks out later tonight. I hope all of you have a wonderful rest of your weekend, and I'll see you Tuesday because I'm not going to be here on Monday. Later, everyone.
Oh, the market is crashing on Monday. See you guys. Sorry. All right, I'll see you guys later.
Later.